This week we're talking livestock slaughter and cattle on feed numbers. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us is livestock economist Scott Brown. Good morning, Scott. We're a little late this week.
Good morning, Megan.
We're going to dig into the details of this week's reports coming up, but first let's recap what happened this week in the market.
Yeah, so Megan, it's nice to generally talk about higher prices this week when we look at the markets. If we start on the cattle side, live fed cattle up about 70 cents this week. Those feeder cattle markets were anywhere from $2 to $7 higher this week. And on the future side, the October live cattle futures contract was up $4.95, which puts it up $7.20 over the last 2 weeks. And the October feeder cattle futures contract up $4.55. That makes that contract up to $12.55 over the last 2 weeks. So it's been a pretty good run on the future side for both live and feeder cattle the last 2 weeks. Choice box beef prices, probably the less than great news this week, down $5.30 to actually put that choice box beef price nearly 90 cents below a year ago level. We spent some time sub $3 choice box beef this week. On the hog side, cash barrels and gilts up 75 cents this week. The October lean hog futures contract was up $3.90 on the week, and we gained 20 cents on the pork cutout value this week.
We had a couple of pretty tough weeks on cattle futures just in general. It's really nice, to be able to talk about back-to-back weeks or a couple of weeks of growth. Is this just is there some seasonality in here? Is there some concern? Is there some optimism? What's kind of forcing this turn back up?
Yeah, so I think much of it is just beef production is going to continue to be short, cattle supplies tight. So optimism that as we move here in the latter part of 2024 and maybe get a little stronger beef demand coming back after a little bit of a lapse after this midsummer peak that we normally see in the demand side. I think that's been driving some of what's going on. And when you look at feed costs, for example, for feeder cattle, this week, the December corn futures contract was down 11.5 cents. So feed costs continue to look better from that side of the picture as well.
All right, let's get into these weekly slaughter numbers as we take a look at both cattle and hogs. Let's dig into these runs a little bit.
Yeah, so USDA tells us for the week ending September 21st, a run of 610,000 head of cattle this week. That's down 10,000 head from what we did last week. We were catching up again, I think, last week, and down 17,000 head from where we were a year ago. And on the hog side, a run of 2.506 million head of hogs this week. That's down 59,000 head from last week and down 41,000 head from a year ago.
And as we take a look at these year-over-year comparisons, how are they shaping up, or how do they continue to morph for cattle and hogs?
Yeah, so for cattle year to date, we're down now exactly 4%, and on hog slaughter up 1.2%.
All right, 2 reports this week, 2 pretty big reports as it relates to what we talk about this week. Let's start first with livestock slaughter and kick things off and get into that beef production number.
Yeah, so USDA reported for August of 2024, 2.3 billion pounds of beef being produced in the United States. That's down 3.2% from what we did August of a year ago. And when you look at the year-to-date numbers, year-to-date 2024, 17.9 billion pounds. In 2023, over the same period, it was 18 billion pounds, so down 0.6%, which this whole discussion about cattle slaughter being down 4%, yet beef production being down 0.6%, tells you a little bit of difference of what's going on the cattle side. I will say, when you look at this report, August of 24, I had one less weekday slaughter this time, and one more Saturday in the mix, also affecting that monthly total.
All right, I want to talk beef cow slaughter, but I want to preface this by saying we've talked about this. When you look at to show substantial pullbacks in retention, what are you looking at to maybe have some signs that we're not liquidating and we maybe have started to slow that pace? Because when we talk about this number, we have to keep in mind that we're also pulling from a smaller pool in general when we're talking about this shrink in beef cow slaughter.
Yeah, so I often will look at Megan, just where do we sit in terms of percentage of beef cow slaughter relative to beginning beef cow herd, as a way to kind of get a better handle on whether we're building or not. I'll always say when we're 8% or above in terms of beef cow slaughter relative to beginning inventory, we're probably not growing the herd. When we're below that, we probably are. That's kind of been the history of the data that we've seen. When you look at the beef cow slaughter data that we have for this month, I think if anything, it portrays a very modest retention of cows, maybe longer than otherwise would be the case, as we've gone through most of this year with beef cow slaughter running well below. So August of 2024 beef cow slaughter was down 22.3%. Year to date beef cow slaughter down 15.8% relative to 2023. That's not been even, by the way, when we start looking around the country. And I think weather still plays a role here. I think as we look at the last month and a half or so, it's gotten dry in a number of places again. But when you look at some of the regional federally inspected totals, one that sticks out to me, Iowa, Kansas, Missouri, Nebraska. So certainly dry in 23. In 2024, down 23.4% is what we've seen thus far. Whereas you kind of look at the south, the Southeast, Alabama, Florida, Georgia, Kentucky, Mississippi, North Carolina, South Carolina, only down 9.3%. Just to kind of give you a bracket of the regional differences we're seeing there in terms of beef cow slaughter.
So kind of your overall assessment is modest, if anything, right now still.
Modest, and if you asked me to give you January 1 beef cow inventory, I would still say probably a lower herd. I think we're beginning to slow the decline, but I'm not suggesting a higher beef cow inventory January 1 of 25, and January 1 of 26 is way too far out there to get too excited about giving an estimate. But nothing that tells me we're just going to see a huge build of beef cows in the data that I see right now.
All right, so let's talk on the pork production side of things as we look at pork production so far this year and for August 2024.
Yeah, so just like for beef production, and we've said this for a couple of months now, pork production 2.3 billion pounds. That's down 0.3% relative to August of 2023. Hog slaughter for August down 1.9, pretty much offset by dressed weights that were up 1.9%. When we look at the year-to-date numbers, pork production at 18.4 billion pounds, up 2.1% from the 18 billion pounds we did back in 2023 year-to-date.
Report out on Friday, cattle on feed. As we take a look at this report, meh, I guess is kind of the response that you get to it, isn't it?
So it is. I'll say when I start. So when we think about this report relative to pre-report, let's talk about some of the actuals we got from the report. So number one, September 1 on feed of 100.6. The pre-report estimate was 100.7. So we were right at the midpoint, just as placements in August were 98.6 according to USDA, and the midpoint of the pre-report was 98.5. So in both cases off 0.1%. But I will say, when you look at the range of pre-report estimates for August, it ranged from 93.5 to 102.3. So I think that's indicative of what we've been seeing of hard to get your arms around placement numbers, and the analysts that have been providing those pre-reports certainly aren't all on the same page. I'll say confirmation that I think we continue to get tighter as we go forward is still what we see out of the latest cattle on feed report.
Is it also more certainty that maybe we do need that mid-year check-in from an analyst or an economist point of view to have that extra data set, not only for analysis, but also expectations, and to kind of be able to track what's happening?
Of course, more data relative to less, I will always say, is a good thing, Megan. Some may disagree with me about that, but I do think when we're trying to really be paying attention to this idea, are we building, not building the herd, that mid-year report could have been helpful to the situation. And so now we have to wait until January 1. And the other thing I'll say is, so these are 1,000 plus feed yards that participate in the cattle on feed report. I have a hunch with corn prices where they sit today, we're probably seeing a little more farmer feeder going on than normally would be the case, and we just don't get that out of the 1,000 plus feed yards.
All right, as we look ahead to this coming week, quarterly hogs and pigs, cold storage numbers, what are you looking for specifically in that quarterly hogs and pigs report?
So the absolute level of breeding inventory, I think, is going to be important. We've continued to say kind of sideways. I've seen some estimates already that would suggest breeding inventories below year ago levels for that report that we get next week. I think productivity continues to push overall pig crop still higher, but we'll wait and see what we get out of that report. But I think that's a big one for the hog industry as we look ahead over the next 6 to 9 months.
All right. Well, we will check in with you next Friday. Great to see you, Scott.
Likewise, Megan.
Our weekly livestock market update delivered to your email box every Saturday. Go to brownfieldagnews.com. You can also submit questions and comments. And for a rundown of what happens every day in the markets, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.